Welcome back, and joining us on the show now is Vikram Dhawan. He's head of commodities and fund manager at Nippon India. Vikram, hi, good to have you. And what a day where we're looking at all-time highs, not just in the equity markets, but in precious metals as well. And gold prices at 2,149 is a level that the street has never seen before. And so are the levels of 64,000 rupees in Indian markets. The sudden move from the low of 1810 in October to 2149 in the month of December. How do you look at this journey? Because it hasn't been gradual by any scale. It clearly has been in spurts and an all-time high right now.
Thank you very much for inviting me on your show, Manisha. This is the rally that we have seen in the past couple of months has been driven by fund buying. When I say fund, it includes hedge funds and ETFs. Now, ETF holdings are at 4-year low. So I think this may have some distance to go before it actually, concludes as far as the fund buying is concerned. What really triggered the fund buying, I mean, they were net sellers up till October, but suddenly they became net buyers, is, post the geopolitical event, which is unfolding as we talk in the Middle East, the dollar actually has depreciated since then, and gold is the only safe haven, which has actually gone up significantly. So that is sort of attracting a lot of buying, a lot of interest from funds purely either on absolute returns basis or on asset allocation basis. Also, we have had, as you're aware, a very strong festive season in India, and the Chinese season is round the corner. Central bank buying also has been extremely strong this year. I mean, in the first 3 quarters, we have seen 800 tons already, as against the long-term average of 400 tons per annum. So this is going to be another record year, it looks like. And, last but not the least, whatever is happening, without, commenting on where the macros or where the various risk assets in markets are, I think the past 2-year performance of gold, despite very hostile macro and micro environment, has actually strengthened its case as a portfolio diversifier.
Clearly that. So, when you talk about India, and while, of course, the physical demand is strong, so is the bridal jewelry demand for that matter. But when you talk about gold as an asset, what is your sense on the accumulation holding when it comes to Indian investors?
I think investors should note 2-3, long-term trends based on the historic data. First of all, gold tends to be the best performing commodity in recessions. And secondly, whenever there is extreme volatility in risk assets like equities, gold has performed extremely well. And also for, the 2 trends that we are seeing, one is, de-dollarization. And also, the strengthening of it maybe the time for emerging economy has arrived with, India leading the pack. I mean, just to give you an example, the consumption of gold in India is roughly about 800 tons. So if we expect the economy to double in the next 10 years, we may not reach 1,600 consumption, but somewhere in the vicinity of 1,200, which is 50% higher demand than where we are. So I think the emerging economies doing well is a good omen for gold, and also gold outperforming dollar as a safe haven is another. That is perhaps the side effect of de-dollarization. So all these factors are something the investors may want to take note of, that again makes gold a very important inclusion in a asset allocation or a multi-asset strategy.
Absolutely. Vikram, we've been talking about the sovereign gold bonds and how people bought at 2,300 and are getting redemptions at 6,200, 6,100. It clearly has been a story that has been a headline for the last couple of weeks now. But if people are buying right now and with expectations that we are looking at further highs coming in for gold in the next year as well, any estimate, projections that you're putting out on where are the prices headed?
So I think, as in your previous shows also, I've been discussing that, every asset class changes hands, leadership in 2 to 4 years time frame. In case of gold, I think one very fundamental thing which the investor need to note is that if India is going to be, the export hub of the world, and if Make in India is going to be something which is going to be a very important pillar of the economic growth, then I think India can ill afford to keep the currency strong. And, gold is one of the securities which gives you protection against, rupee depreciation. I mean, without, talking too much about the currency, I mean, manipulation may not be the right word, but if you see the story of Japan and China, I mean, some sort of currency management was done to sort of, promote the exports. So I'm not saying that the rupee has got a negative view from here, but I think this is one area where we may have to be very judicious in not allowing rupee to appreciate too much against the other currencies. So which sort of makes gold another, gives another dimension to gold as a holding for you. In terms of returns, I think perhaps, you can refer to the historic returns of gold, and which has had an element of 3 to 5% of rupee depreciation. And, that is where we see also gold, performing the dollar returns plus the rupee depreciation going ahead.
The way Indians buy is more about in physical, the kind of holdings that we have. And as you said, it's only perhaps going to go higher from here. There are people still buying. We do understand from the Indian markets that with the kind of sudden spurt that we've seen in case of gold, there is a discount right now in physical markets. Having said that, do you also belong to the camp which believes that we are headed to 2,200 and 2,300 and 2,400 in the matter of next 12 to 18 months?
So I think it's very difficult to put the price or timeline to it, but the fact remains that gold is significantly undervalued even at current levels. Moreover, because the cost of production of gold has gone up significantly. I mean, a decade back, the average cost or the incremental cost of production was around $1,000 to $1,200 per ton. Now, to my senses, that has been pushed to somewhere around $1,600 to $1,800. So we are not too far away from there, if you really see in percentage terms. So I think, all the factors, the de-dollarization and the emergence of physical demand from, emerging economies and central bank buying, etc., will push the equilibrium price a lot higher than what we have seen in the past few decades.
Wow.
Wow, it's incredible. People wonder where is it that one can invest at this point in time. I think the way the markets are going, the way cryptocurrency is going, and as Manisha has been telling us, the way gold has been going, anywhere you invest, you will perhaps make money. It's all on you. With that, we take a short break, come back. On the other side, you have Business Lunch, which will take all the action ahead. Thank you for watching.